Right, good morning then everyone as we head into European trade on Tuesday the 8th of October. We'll have a look across markets and we'll see what's going on. Not much in yesterday's trade, FX not moving around too much. Stocks, bit of downside in stocks yesterday. Bond yields not really doing too much. I mean, if you look at the calendar, there's not much in the calendar. Have a look at the charts. I mean, a little bit of downside yesterday for the Aussie, but Aussie and the Kiwi. But look at Euro, look at Sterling, look at Dollar Swiss. Dollar CAD grinding its way higher, Dollar Yen. So your kind of risk sensitive currencies are still continuing to trend lower against the dollar, which is an interesting one. But the rest of them didn't move, which is a bit of risk off the table from this point of view, with equities kind of having a bit of downside yesterday, still trapped in recent ranges though, so nothing major from that point of view. But yeah, you can see your S&P, your Dow Jones, your Nasdaq, your Russell all having a bit of downside. Yes, I think an interesting one, there's some comments made over Twitter, or not Twitter anymore, it's X. The Jerome Powell said that the policy path was slightly above what it's supposed to be, or the expectations for the policy path is slightly above what it's supposed to be, and that caused some downside in stocks. But he wasn't even speaking. Nothing had been confirmed that he was talking about. I'll have to read the tweet again to see exactly what it says. But he wasn't talking yesterday. There wasn't any released footage of him or released speech or any of that sort of stuff. I think it was just a random tweet that the news sources decided to latch onto, which is not something you see too often in markets, but doesn't look like too much went on, to be fair. You see bond yields kind of chopping sideways yesterday. Oil tried to go higher, came up to about 70, 79 and then rejected, and it's back down 76.30 at this point in time. Gold still all over the place, so not really clear direction across pretty much the majority of things in yesterday's session. And that was obviously confirmed then by the economic calendar as well. Economic data out overnight was okay out of Australia, to be fair, but the Chinese back on the agenda after the week-long holiday, failing to deliver any sort of sizable stimulus measures, and that is the response in the Chinese stock index. I mean, you look at that, what's it off the highs? It was down 13.7% at one point. This point now, certainly, basically, the second it opened was to there. So I mean, it still traded last week. Things still continue to trend higher, but Congress had a week-long holiday, so failing to deliver any further stimulus measures, which is obviously not a good thing if you're looking at this chart. So I think the stimulus measures that were introduced into China, I mean, obviously the massive stimulus measures, but people still seem to think that it doesn't fix the problem. So the fact that there's been no further announcements, and this is the reaction to it, would lead me to believe the same thing. I'm not going to pretend to be a genius on Chinese economics. And the way they work is a little bit different to how the rest of the world works in terms of that sort of stuff. But obviously the policy measures that they brought in were sizable policy measures, and they have clearly got a struggling economy. Whether those policy measures are going to be enough, maybe not what my skill set lies, I'm not going to lie. But you read some credible people's analysis of the situation. That's what they seem to think, but ultimately it doesn't really matter what I think, it doesn't really matter what they think. You just look at what's gone on in the chart, and obviously this massive upside over that couple of weeks was driven by those stimulus measures, right, which is a good thing. But then clearly the markets were looking for more because they didn't get more, and that's the reaction. Right, you didn't get that reaction when they introduced stimulus measures. You get that reaction when they failed to continue it. So I'm not sure what that really does going forward. The Chinese stocks, certainly they're under pressure in today's trade, and you'd have to imagine by the size of that move, probably will be to continue. Going forward, I still stick to the script from yesterday. You do have the RBNZ out overnight. Now you're expecting cut interest rates they're expected to cut interest rates by 50 basis points, and that is not fully priced in. So if they do go ahead and cut by that 50 basis points, you're probably likely to get some downside in the Kiwi dollar. Although you did have some downside yesterday and this morning. a little bit this morning so far. So the fact that you've got that would mean the markets are probably more pricing in 50 basis points worth of cuts, and which will already bring them to more than the RBNZ had predicted. In the past, they predicted 50 basis points through to end of this year. They did 25 back in August. They're due to do 50 today, or tomorrow morning technically, and that itself is more than what they had predicted. It's probably negative for the Kiwi dollar. You'd have to imagine it's negative for the Kiwi dollar. They'd have to come in with some pretty strong commentary, like flat out, like completely ruling out a 50 basis point at the next meeting, because markets are kind of thinking we may get a 50 basis point cut at the next meeting. You gotta think, tensions out in the Middle East causes a bit of risk off trading, especially if that escalates. You've got the election in the US coming up in not that long away now, before 4 weeks, 4 or 5 weeks, 30 odd days. I think that was it. JD Vance was saying 33 days, was it, on Friday or Saturday or whatever it was. Is it the 10th of November? I should probably know the exact date, but I will have to re-jog my memory after we get off this. But I mean, I suppose it's about a month away. It's something we really need to know for now. And you'd have to imagine a bit of de-risking in risk markets, certainly equity markets. I've been chopping sideways the last couple of weeks. Do they chop sideways in the lead up to the election days? I don't know. Potentially, but we're getting closer to that point, and I'd imagine there'll be a bit of de-risking as we come into that. De-risking in equity markets, a bit of risk-off trading, not good for the Kiwi dollar. Tensions in the Middle East, not good for the Kiwi dollar. And if the RBNZ don't really rule out a 50 basis point meeting at the next meeting, I would imagine that the Kiwi dollar is probably due to remain under pressure. So that's what we'll be looking for Wednesday morning tomorrow. Apart from that, we kind of stick to the script for everything else. I think Kiwi itself is probably a decent bet for a short. US dollar continues to be supported, especially if equity markets take a dip heading into the election. US dollar probably remains supported as well. The fact that pricing for a further 50 basis point cut is being completely wiped out. Again, it's probably another reason for US dollar upside. And then especially if we come into inflation on Thursday, get some even in line or maybe slightly stronger inflation print out of the US. There's maybe something worth looking at. Definitely worth selling the Kiwi dollar. Also oil. Maybe something to do with oil when it comes around to the inflation print. You can see over the month of September. I mean, it was trying to kind of lower to begin with in September. I suppose the first September was actually all the way back here. So never mind that analysis. But we'll come into October. October is up. The price of oil in October so far is. It was up 17% at one point. Is up 15% now at this point in time. Right from the lows, it is. Right from the lows, it is up 20 odd percent. So that is likely to be a contributing factor to some potential inflation in the coming print. Probably not reflected in Thursday's print, but let's see how that pans out. Economic data has been okay out of the US, so it'll be interesting to see what inflation has to say for itself on Thursday. And I think that as a chart, definitely got to keep your eyes on over the course of this week. Rest of the markets, no, I kind of lacking clear direction, but Kiwi shorts, I still stick to the script from yesterday as well. Just kind of be more actively looking for Kiwi shorts post RBNZ if we get the announcement we're looking for. But anyways, apart from that, things aren't moving around a great deal this morning, so be careful out there, and best of luck.